You want to wake up in the morning and think the future is going to be great. And I can't think of anything more exciting than going out there and being among the stars. Wow. Okay, that is a massive, ambitious vision, right? Usually a quote like that belongs in a sci-fi novel. But today, it's literally the opening salvo of a dense legal and financial document from a company attempting to single-handedly build that sci-fi future.
And backing up those massive ambitions is a truly staggering number. $18.6 billion. That is the actual revenue this company generated in 2025 alone. Just let that sink in. Welcome to the EDGAR Brief, where we translate dense Wall Street filings into plain English for the rest of us.
Today, we're cracking open the massive S1 filing from SpaceX, ticker symbol SPCX, filed right ahead of their highly anticipated public offering. Quick note before we jump in, we're independent, not affiliated with the SEC, and we are definitely not financial advisors. We use AI to help summarize these docs so errors can happen. Always verify on sec.gov before making any money decisions. All right, let's dive into this. Here's our roadmap for today's explainer. We've got deconstruction, the scorecard, the moat check, reading between the lines, red flags, and finally, the verdict. Section 1. Deconstruction, the three-headed business model.
So, we really need to figure out how this three-headed business actually makes its money. But first, a quick translation. What exactly is an S1? Well, it's simply the massive, legally required document a private company has to file with the SEC to show its financials before going public. It basically tells us what they sell, to whom, and where all the cash goes.
And SpaceX sells three very distinct things. You can think of them as three separate but deeply connected businesses. First up, you have space. This is essentially a galactic delivery truck. They charge commercial and government customers massive shipping fees to blast satellites, cargo, and humans into orbit. Second, you have connectivity, which is driven by Starlink. Think of this as a global internet toll booth right up there in the sky. Customers buy a dish and pay a monthly subscription for internet literally anywhere on Earth. And finally, the newest piece of the puzzle, AI. Born from their recent acquisition of XAI and the X platform, this is a massive, energy-hungry brain digesting the internet in real time. It makes money through subscriptions, advertising, and enterprise data licensing. So basically, SpaceX is an infrastructure ecosystem that makes money by charging a premium for accessing space, accessing the internet, and accessing artificial intelligence.
Section 2. The scorecard, translating the raw financials.
Now let's translate the raw financials and see if more dollars are actually walking in the door compared to last year. Because if you want to understand who is going to dominate the future of the global space economy, well, these numbers are your ultimate guide. What's absolutely fascinating here is the dramatic shift in where the money is coming from. Look at the space segment. It grew from $3.55 billion in 2023 to just over $4 billion in 2025. Solid, steady growth. But then look at connectivity. Starlink absolutely exploded. It went from $3.86 billion to a massive $11.38 billion. Starlink is literally no longer a side project. It is the main cash engine of this entire business. AI is sitting at $3.2 billion, but honestly, it's very early days for that segment.
To really understand their profitability, we have to look past that top-line revenue and look at something called Adjusted EBITDA. Now, in plain English, Adjusted EBITDA is operating profit before the accountants get involved. It ignores things like depreciation and taxes to give us a much closer look at the actual cash being generated by the day-to-day business.
And this brilliantly illustrates exactly why understanding that term matters so much. Because if you just read the headlines, you'd see SpaceX posted a $4.9 billion net loss in 2025. You might think, wow, the business is bleeding out. But in reality, their Adjusted EBITDA was a positive $6.5 billion. How is that even possible? Well, because SpaceX is spending an absolute fortune building rockets, satellites, and data centers. The accountants record the depreciation of those massive physical assets as a loss on paper. But in terms of actual cash generated from their operations, the business is a highly lucrative cash cow.
Section 3. The moat check. What protects them?
So if they're printing $6.5 billion in cash, why can't a competitor just cross the street and crush them tomorrow? The answer is a competitive moat that is as wide and deep as the Pacific Ocean. First, they have at least a 10-year lead on reusable rocket technology. Literally nobody else is landing rockets on ocean barges every few days. Second, extreme vertical integration. They don't just assemble parts, they build their own rocket engines, their own silicon chips, and their own satellite dishes. And third, just pure scale. They currently operate a constellation of over 9,600 satellites.
For a competitor to challenge them, they wouldn't just need a good idea, they'd need tens of billions of dollars and a full decade of perfect execution.
Section 4. Reading between the lines. Unpacking management's discussion and analysis. This is where we look at the MD&A to see where leadership is aggressively placing their bets. And the numbers here are jaw-dropping. This chart shows their capital expenditures. That's the money they spent on physical assets and infrastructure in just the first 3 months of 2026. They spent about $1 billion on space and $1.3 billion on connectivity, but look at AI. They poured an absolute fortune, $7.72 billion in a single quarter, into building gigawatt-scale AI data centers and supercomputers. They are vastly outspending their rocket and satellite divisions just to win the AI race.
So the crucial takeaway here is this. The core strategy of SpaceX is beautifully ruthless. They are using the massive, reliable cash flows from their space delivery truck and their Starlink toll booth to fund the wildly expensive next-generation sci-fi ambitions of their AI brain and the Starship program.
Section 5. Red flags. Cutting through the boilerplate.
Now, obviously, nothing is guaranteed. We're going to cut through all the lawyer speak and find the real vulnerabilities. Because we really need to pause the hype for a second and ask a cold, hard question. What could actually go wrong here?
Well, the filing reveals a few company-specific risks you absolutely need to know. First, the dual-class structure. Elon Musk holds Class B stock, giving him 10 votes per share. Let's be clear, if you buy into this, you are investing in a dictatorship, not a democracy. What he says goes. Second, the Starship program requires an incredibly heavy cash burn for research and development, and the vehicle isn't even fully commercialized yet. And finally, that huge AI bet we just talked about, it is burning cash like rocket fuel. The AI segment posted a $6.3 billion operating loss in 2025 alone. If those AI bets don't pay off, it's a massive drag on the whole company.
Section 6. The verdict. The bottom line. To sum it up, SpaceX is an unmatched infrastructure monopoly with an incredibly durable moat. But they are spending cash at an astronomical rate to build the future. Here are the 3 specific things we're going to track in their next filing. Number 1, watch to see if Starship actually begins deploying payloads in the second half of 2026 as they promised. Number 2, track the timeline for their orbital AI satellites, which is currently projected for 2028. And number 3, monitor Starlink's average revenue per user, or ARPU. It declined slightly as they expanded internationally, so we really need to see if higher volume makes up for those lower prices.
And that's your EDGAR brief on SpaceX. Remember, this was a translation, not a recommendation. So, what do you think? Will their massive bets on orbital AI and Starship actually pay off? Or will that astronomical cash burn bring them crashing back to Earth? Read the original S1 on scc.gov if this piqued your interest, and let us know what you think. Thanks for being with us at the EDGAR Brief. We'll see you in the next filing.